Hi, welcome back to your accounting help. So today we're going to be looking at the basis of public sector accounting, and we're going to be using the T08 by the NBAA in Tanzania. So this is what we're going to be covering. We're going to identify the basis of accounting in public sector entities. We're also going to look at the cash basis of accounting and the accrual basis of accounting. And then in part 2, we'll look at the accounting models and accounting standards. We'll explain the commitment accounting concept, and then finally we'll explain the importance and applicability of commitment accounting in public sector. So beginning with the first one, identifying the basis of accounting in public sector entities, let's first understand what are international public sector accounting standards. International public sector accounting standards are a set of accounting standards issued by the IPSAS board for use by public sector entities. So IPSAS are broadly based on international financial reporting standards issued by the International Accounting Standards Board. What does this mean? This means that the International Accounting Standards Board usually issues IFRS. Now, in the development of IPSAS, they are mostly based on the IFRS. So, in most cases, an IPSAS and IFRS will have a lot of similar areas, okay? What do we mean by public sector entities with regard to this area of study today? Public sector entities include the national or central government, regional governments, local governments, and finally related government entities such as agency boards, commission, and enterprise. The framework for preparation of financial statements under IPSAS recognizes two governmental accounting systems. The first one is the cash basis of accounting, and the second one is the accrual basis of accounting. With the cash basis of accounting, expenses are recorded when they are actually paid, and revenue is also recognized when cash is actually received. Now, if you don't understand what I just said, don't worry. We're going to see a few examples ahead and you'll understand the cash basis better. So with the cash basis of accounting, the primary focus is on the amount of cash in the bank, and the secondary focus is on making sure all bills are paid, okay? Moving on to the accrual basis of accounting, transactions and other events are recognized when they occur and not necessarily when cash is received or paid. Let me explain this. With the accrual basis of accounting, if a transaction has taken place, okay, for example, you have sold goods to someone on credit. Now, selling goods on credit means they are going to pay later, they're not going to pay immediately, but you have made a sale. Now, the accrual basis of accounting requires you to recognize a sale on the date the transaction took place, even though you have not yet received the money. The same with expenses. You're required to record an expense as long as you have incurred it on the date you incurred it, and you do not wait until when you pay to recognize the expense, unlike in the cash basis of accounting. So revenues are recognized when income is earned, you do not wait to receive cash, and expenses are recognized when liabilities are incurred or resources consumed. For example, you record salary expense as soon as the month ends, even if you have not yet paid your employees. Let's look at an example. Anne bought goods on credit on July 1st and paid for them on August 1st. When do you recognize the expense under accrual and cash basis of accounting? Let's start with the cash basis. Now remember, we said under the cash basis, you recognize when you receive or when you pay the cash. Looking at this question, Anne bought goods on credit on July 1st and paid for them on August 1st. So the date when the cash was moved, the date when the cash was paid, is the date when we are going to recognize the expense under the cash basis. Okay, that is August 1st. Now, with the accrual basis of accounting, we recognize on the date the transaction took place, even though the movement of cash may not have necessarily taken place. Okay? So with the accrual basis, we're going to recognize this on July 1st, meaning you recognize the expense when you incurred it, even if you have not yet paid. So that example was under the expense side. Now let's look at an example on revenue. John sold goods on credit on July 1st and received his cash for them on August 1st. When do you recognize the revenue under accrual and cash basis of accounting? Under the cash basis, John received his cash on August 1st, so that is the date when we are going to recognize the revenue under the cash basis. However, under the accrual basis, we're going to recognize this on July 1st, the date when he earned the cash even though he had not yet received it. Okay? Let's look at the cash basis in deep. An entity should prepare and present general purpose financial statements which include the following components. The first one is a statement of cash receipts and cash payments. Now, what does the statement of cash receipts and cash payments include? It includes cash receipts, cash payments, and cash balances. Now, you're going to record your cash receipts. You're also going to record your cash payments for the year ended, okay? And then the difference between the cash receipts and the cash payments is what is going to be your cash balance, okay? And then you're also going to separate payments by third parties on behalf of the entity. The other component is the accounting policy and explanatory notes. And then finally, when the entity makes publicly available its approved budget, you're also going to present a comparison of the budget and the actual amounts. What are the advantages of the cash basis of accounting? The cash basis of accounting is simple to understand. It does not require a lot of complications. The main thing with the cash basis of accounting is you recognize when you receive cash and also when you pay cash. So it does not include a lot of complications, unlike under accrual accounting basis. It does not involve year-end adjustments. Okay? It eliminates accruals and prepayments. That's another advantage. With the accrual basis of accounting, you'll see an example in front. It involves accruals and prepayments to make sure that the matching concept is followed and everything is put in the year it was incurred or received. It saves time and is easy to operate, and it easily identifies those who authorize payments and those who collect revenue. Now moving on to the disadvantages. The cash basis of accounting will not give a true and fair view of the financial statements or the financial position of an entity, okay? This is because the accrual principle is not followed. For example, during a year, a business sold a certain amount of goods on credit and also a certain amount of goods on cash. Now, under the cash basis of accounting, you will only recognize the goods that were sold on cash. Now, does this really give a true and fair view of the sales of the entity during that year? No. Giving a true and fair view of the sales of that entity means giving the total sales, including the credit sales. But under the cash basis, we are going to ignore the credit sales, which is not true. Okay? Another example is, for example, you pay cash for an expense, okay? But that cash moves on to the next year. Maybe you have paid for rent for 2 years. You're going to recognize the expense on the year you paid the cash, but in the year where the expense follows, you're not going to be recognizing that cash, and that is wrong. Okay? That does not give a true and fair view. Another disadvantage is the matching concept is also violated. Now, the matching concept means that revenue of a certain year should be matched with the expenses of that particular year. So, for example, revenue of 2013 should be matched with the expenses of 2013 and not otherwise. You're not allowed to bring in revenue from 2014 into revenue of 2013. Another disadvantage is no depreciation is provided for fixed assets. Let's look at the accrual basis of accounting. With the accrual basis of accounting, the advantages are it reveals an accurate picture of the state of financial affairs at the end of the period. Now, looking at this first advantage, you can see the advantages of the accrual basis of accounting are the exact disadvantages of the cash basis of accounting. The accrual basis of accounting reveals an accurate picture of the state of financial affairs at the end of the period. The second advantage is because it gives an accurate picture of the state of financial affairs at the end of the period, users can use the financial statements made under the accrual basis of accounting to make better informed decisions. It also gives a realistic view of financial transactions. And finally, it is in line with the matching concept, as well as it records fixed assets when they are purchased and makes allowances for the depreciation. But what are their disadvantages? The disadvantages: it is difficult to understand, especially by the non-accountants, okay? It involves a lot of year-end entries for recording accruals. Let's look at a question. Nachingwea City Council had the following transactions during the period to 31st March 2013. The first transaction, they received 10 million on 20th February 2013 from Korosho Company for completing a project which will be completed in 2 years' time. The second transaction, they paid for electricity a total of 5.6 million on 15th March 2013, out of which 800,000 relates to electricity prepayment for the coming year, that is 2014. So, calculate how much should be treated as revenue or expenses under both cash and accrual basis. So let's begin with the cash basis. With the cash basis, again remember, under the cash basis, we recognize revenue at the time the cash is received, and with expenses, we recognize expenses at the time when the cash is paid. So we are going to recognize the entire 10 million, okay, as revenue in the year ended 31st March 2013. The same with the expense. We are going to recognize the entire 5.6 million as an expense in the year ended 31st March. Let's look at the accrual basis. With the accrual basis, you do not recognize the entire 10 million, okay? This is because This amount of revenue accounts for 2 years, okay? This is why we say the accrual basis gives an accurate picture, okay? Unlike the cash basis, the 10 million is not for the year ended 31st March 2013. It includes also the year ended 2014, okay? So the 10 million is going to be apportioned over a 2-year period. How? This will be on the basis of percentage of completion. For example, in the first year, they completed 60% of the project. So the revenue they are going to recognize for the first year is going to be 60% of 10 million. And 40%, the remaining 40% is going to be recognized in the following year. So that is how the accrual basis is going to recognize this revenue. With the expense, the amount paid was 5.6 million. However, out of the 5.6 million, 800,000 was a prepayment for the coming year. So during the year ended 2013, the amount of expense we are going to recognize is going to be 4.8 million, which is the difference between 5.6 million and 800,000, okay? And then we are going to recognize 800,000 as a prepayment, okay? It is going to be a prepayment for the year ended 2013, as at 2013 it is a prepayment. However, in 2014, since the 800,000 was an electricity payment for 2014, during the year 2014, 800,000 is going to be recognized as an expense for the year ended 31st March 2014. I hope this really puts things into perspective. You can see the cash basis. It is easy to record. It does not require a lot of calculations and complications. However, it does not give an accurate picture. The matching principle is violated and the accrual principle is violated. It is not necessarily what users will use to make decisions. However, with the accrual basis, it gives an accurate picture even though it involves a lot of calculations, okay? And it is very, very useful for decision making purposes, and it shows properly what happened. It gives a realistic view of the transactions that took place during a year. So that's it for part 1. We have first identified the basis, we have explained the cash basis, and we've also explained the accrual basis. So in the next video, we're going to deal with the remaining 3 parts, which is the accounting models and accounting standards. We're going to explain the commitment accounting concept, and we'll also explain the importance and applicability of commitment accounting in public sector. Thank you for watching. If you have any questions, comment down, like this video, and don't forget to subscribe, as this will help the channel and this will help me continue making more of these videos. Thank you.